Hi everybody, let's take a look at the market and what happened today. So I'll just go over nat gas and copper. So in nat gas, you have this move down that had double the average down volume and biggest wave in 37 down waves. So the market basically had a low volume pullback after, and then went and pulled back and did the test against the high bar. That offered the entry opportunity either here or on this or the one of the red bars. So there's any one of these red bars. All right, so you have the selling, low volume pullback, then it pulls back again. That's a test, offering a low risk entry. After the low risk entry, reversal, red reversal, red reversal. These are all shorts. And then it goes down, but the problem is that it didn't trend, meaning it didn't have a big trend. It only made one lower low and then got bought back up, and this negated the trade. So if you're short here or here, it would and it went down here, it didn't take partial profit or full profit, then it's a break-even trade, and that's all there really is to it. All right? Sometimes this happens when the market's just not moving. That's what happens. You just go from high to low, and it just doesn't move enough, and then this is when you know that there's a big problem when it pulls back, and it pulls back on the biggest in 49 up waves. That's a very strong wave, so there's no point. The shorts, they've been negated by this very strong up wave. Second trade was this right here in copper. This trade is pretty clear. I mean, biggest wave in 13 up waves with the biggest volume in 10 up waves. Big wave, big volume. Big wave, big volume equals buying activity. After that, though, market pulls back, gives low volume pullback, gives the green bars. But it's just, this market is dead right now. So there's just no one here. It's just not ticking up and down. So the activity is low. When the activity is low, there's no point, meaning it's just going to drift. So certain markets that don't have enough volume and activity, that's how they'll behave. They'll be very sluggish and they'll be slow. So although as it came here and took out these lows, there was buying activity, could have just been covering. So we don't know. All we know is that this buying activity is maybe not accumulating for a big move, but possibly covering whoever shorted up here. And then after that, these low volume pullbacks indicated no presence of supply. And I thought it was going to go after this up wave. After this low volume pullback and followed by this up wave with a green bar, I thought it was going to go. But, we entered lunchtime. And as I've explained many times, certain time periods, there's certain time periods to trade and other time periods where the market will slow down and will just not move. And as you entered lunch after that 11:30 Central, it just right here when it got closer to that 12 Central, it just had no more in it, no more activity. So we'll just wait for the next day and wait for opportunities to present themselves. But this is a result of a great setup, but time of day, there's no volume and activity at that time of day. And this is what happens. So you have to catch it during the right time of day when there is activity. Other than that, I'm just going to give some examples of effort reward using the tape reading chart. It's really important. Let's start picking. Let's go through. This is what I explained yesterday, effort reward. Right? So you have, for example, when you have a lot of volume and you don't have a lot of output, you have a lot of input being volume and distance being the output. You can see comparatively you had less volume here and the same amount of output. Then you have, I think, more than 25% more volume and the same amount of output. There's a problem, and that's why you have a bounce. Right? This is another example. And again, you know, you don't use this as a signal in itself. It has to be used with levels and all of that and judgment. So, for example, if you see this rally here, and you want to buy the pullback, what happens? Right here, you have a lot of volume, but the output is nothing. You know, the same amount of output here. So all that volume, where's the reward? Where's the juice? Where's the output? There's a lot of input in terms of volume, but not a lot of output. It's the same output as this, which had much less volume. So the more volume, same amount of output. And why? Because someone was buying right there. As the market went into this base, into this zone, started going down, someone started buying, and then popped it up. This I'm not really sure what this is right now, but this I have more conviction in because it's at this zone or this level where you had ease of movement to the upside, followed by a really nice pullback into that same demand area, and then that's where you have effort reward. All this effort, no reward, all this input, no output, and meaning that they're buying the pullback, right? Buying the pullback, also known as reaccumulation, and then goes up. Go to another market. I don't know what this is. Here's another example. Market pulls back into an area, bang, bang. This volume produces that much output. The next one is the biggest in 15 down bars, more volume than the prior bar, more volume than the prior bar, but look at its output. So more input, less output, it's effort reward, and you can see why. Why? Because of this. The 2100 contracts being bought as price goes into a prior area of demand. And that's why. And then it bounces. Oh shit, this looks like it's setting up. I haven't really taken a look at it, you know, trend and zone, but this is a clear example as well. Again, you do not want to use this without levels and areas that are important, because you can have a lot of volume and not a lot of output, and it could be absorption to continue to go down. So is it effort for a reversal, or is it absorption to continue to go down? Assuming that this was not in a downtrend and you had buying activity in the background, and this was a pullback, then this would be an example, a valid example, where you have this much volume producing this much output, and then you have more volume producing less output. Why? Why is more volume producing less output? Assuming that you have buying activity and this was on a pullback, it would be an example of a lot of effort and no reward. And effort reward is reaccumulation. So this would be an example. After that, the ease of movement to the upside would validate that it really is effort reward. Take a look at another example if you have any. This is another example. You have, for example, this volume is producing that much output. More volume is producing less output. Why? Because on the pullback, it's finding demand, buying activity. So it's becoming harder to go down because there are buyers on the other side. So as price goes down, assuming that there's demand and all of these levels, etc., we see that the volume increases, the input increases, and the output decreases validating effort reward. What do you want to look for after this? Ease of movement to the upside to take an entry. This I don't know about this one. This one was copper. There was some here. And there was some bearish activity here. And then finally this was selling. And this one's not really that clear. I mean, I'm looking at, first of all, I'm looking for a bullish trade here. So because of that, I'm looking for bullish effort. And I don't see it. And I think though that's enough examples. Let's go back to the ES. See, it's getting really interesting here. Is this effort or is this absorption to break lower? That's the question. That's the question right here. All right, that's all I got. Thank you all. Have a good day. Bye.